India's GDP contracted by a heartbreaking 24% in the first quarter of this fiscal. What is worse, it is come in worse than most estimates that we got in our CNBC-TV18 poll. So clearly, there is a shock element in the numbers. Agriculture is the only segment that has shown a growth of 3.4%. Manufacturing has contracted nearly 40%, construction nearly 50%, and trade, hotels and transport, the largest segment in services, has contracted by 47%. From the expenditure side, private final consumption expenditure has contracted by 27%. Capital formation down by 53%. We shouldn't be shocked by that. But government expenditure is the only one that has stood up 16%. So the only bulwark for the economy at this point in time. But what and how much can the government do to revive economic growth? And is the economy likely to turn around in the second half, or are we going to be in contraction mode for the entire FY21? To answer some and all of these questions, we have with us a panel of top-notch economists. Joining me is the former chairman of the Statistics Commission and former chief statistician, Dr. Pranab Sen, Sudipta Mundal, distinguished fellow at the NCER, member of the 14th Finance Commission, also was in the National Statistics Commission. Sonal Verma, Chief India Economist at Nomura, and Soumya Ghosh, Group Chief Economic Advisor at State Bank of India. Gentlemen and lady, thank you very much. Dr. Sen, first to you. The Chief Economic Advisor is hoping, has been speaking about a V-shaped recovery going by e-way bills, power consumption, freight volumes. Are you getting a sense that a recovery is underway?
Recovery is certainly underway. The question is that, what does one mean by a V-shaped recovery? When you're looking at a minus 24% footprint in the first quarter, minus 10 looks like a V. So we are certainly seeing a recovery. The question is really, again, not on the growth rates per se, but the recognition that in the first quarter itself, the country has lost approximately 13 lakh crores of income. Correct?
Yes.
Now, 13 lakh crores is not a small sum of money.
So it looks like that we may remain in, I'm still looking at it quarter on quarter. Will we, by the fourth quarter, start posting something like a growth number, Dr. Sen?
In the fourth quarter, I do expect to see a positive footprint, but that's mainly a base effect, simply because fourth quarter this year was much lower than what we had expected. But, the kind of hopes that people have that in the late second quarter and third quarter, where the festive season kicks in, we're going to see a huge increase in consumption and GDP. I don't think that's going to happen. In fact, you will see increase in consumption during the festive season, but relative to last year, you may actually see a larger decline.
Okay. Oh, yes. Festivities aren't even allowed. The Ganesh festival,
right,
which would be a big consumption boost in Mumbai, obviously had to be scaled down to next to nothing. Dr. Mundal, what is your sense in terms of, in terms of the way in which the disease and the daily numbers are panning out? Do you think now we have to postpone our expectations of recovery because the pandemic is getting worse?
It depends what you mean by pandemic getting worse. If you look at
the daily data is like 75,000 now. It was 65,000 last week. Dr. Mundal? Dr. Mundal, we are not able to hear you,
Quite
sir.
remarkably, this perfectly fits fifth degree polynomial and so on. I'm not saying that will continue, but on present indications, the death rate should really, more or less taper off by the end of September. It may not happen because you keep, getting these, spikes from time to time in different parts of the country. Then you again have to have a lockdown and so on. So, but on present indications, it's following a very steady path of decline. The growth in daily deaths.
Okay.
In absolute terms, it's been
higher.
Stationary under 1,000 for 1,000 persons for the whole country dying every day from COVID. And that's a stable number for, I think, the past 3 weeks or so. Sometimes crosses 1,000, sometimes goes down to 800, but more or less that's the ballpark where we are. And we've stayed there for 3 weeks. That's the more important thing. So,
well, we are also learning to live with the infection. More economic activity is being permitted.
Exactly.
Yeah. So would you agree with Dr. Sen that maybe, of course, the base effect will help, but could we see positive economic growth number by the time we come to the fourth quarter?
maybe just about, and mainly because, Q4 of 1920, as Pranav mentioned, there was already a big dip. So you might get that base effect, but it won't be much. I mean, you might get a plus 1% or 2%, but it wouldn't really add up to much for the year as a whole, which is really what counts. I think I would now say after these numbers have come in, and as you know, we've been saying from May that the decline would be 25% and first quarter has turned out to be 24%. So I'm much more confident now about the way we go about making our sort of assessments. So I would say we are looking at probably a minus 10% GDP
the year.
For the year as a whole.
Okay, so that's a contraction. And well, Dr. Sen, I believe that you have to leave. So very quickly, what would you, advise the government at this juncture? They are trying infrastructure steps and they are trying, NREGS kind of expenditure. But where can the government's scarce resources be sensibly spent?
Well, Lata, I am not sure that that's entirely correct, because the GDP numbers are pretty surprising. So if you look at on the production side, if you look at public administration, that has actually contracted by 10%.
Yes.
But the government consumption has gone up.
Yes.
Now, the only interpretation that one can take from that is that public investment is down, not up.
Okay.
Now, if that is the case, I think it's absolutely imperative that public investment gets pushed up at least to last year's level, if not more. We are a long way away from there.
And how do you finance it, sir?
Well, at the moment, financing is not the issue, because remember, for most investment, the payout actually takes place later.
Okay.
Okay, so the government is going to have simply, accounts payable accumulating on its books.
Okay.
But the private sector who actually does the work will get a sense that there will be a certain amount of an income stream that will be coming on place.
Okay. Okay. So perhaps that would be a stimulus. Well, that's what the CEA hinted, that there will be, infrastructure spending is one pillar the government is leaning on. But he also indicated that some consumption stimulus can be given around the festival time. Just what can they do, Dr. Sen, before I let you go?
Well, as far as the consumption spend is concerned, the government's ability to step up consumption is actually pretty limited. There isn't a lot that it can do. What it can do, especially around the festival time, is to actually increase the cash payments that had been started into the Jan Dhan accounts. That can get stepped up quite substantially.
Okay.
So what it will do is that if the money comes just before the festive season, it will be spent immediately. It's not going to be squirreled away.
Okay. Okay.
So that would be one, I think, fairly effective way of doing things. Although, mind you, it has a low multiplier.
Okay. Well, yeah, at the moment, perhaps any little will do. Thank you very much, Dr. Sen, for staying on with us. Now, let me come to Sonal Verma for her, extrapolations from the current number. Is this worse than you thought, Sonal? And now, what would your estimates be for the full year?
Lata, hi. Definitely much worse than expected. Essentially, on the supply side, we were looking for positive growth rates in agriculture, financial services, and the community services segment. So while agriculture did come in positive on both the other segments, there was a negative surprise. So it looks like either the real estate side of that component or the personal services side of the government services component has been significantly worse than what we had anticipated. Also, the extent of decline we have seen in private consumption has actually surprised us negatively. So I think for all the talk of rural consumption, looks like rural side has probably not been as resilient as what one had expected. Now, looking ahead, sequentially, growth rates have started to improve, but I would call it more of a normalization rather than an underlying economic recovery. And what concerns us is that across a number of indicators, we are still, the sequential pace is actually tapering off. The recovery is uneven. Yes. And in a number of sectors, we seem to be stabilizing at a level which is still significantly below the pre-pandemic level. So even in the fourth quarter of this financial year, we actually don't think growth will be able to get back into a positive territory. So, it's a fairly long period of below trend growth. And, our concern is the impact this is going to have in terms of the underlying fragilities, whether it's for the labor market, for the MSMEs, and eventually, of course, for the banking sector. So, I mean, given we are starting this quarter with a, close to minus 25% contraction, there are clearly downside risks to our estimates. I mean, we have a growth contraction of over 6% for FY21. So we will be re-looking at that.
Oh, you'll be re-looking at that. Soumya, what's your sense of what the government can do now? The only hint we got from the CEA is, like I told Dr. Sen, that some consumption boost makes sense during the festive season, because at that time it will not be saved, it will be spent. Your thoughts in terms of future fiscal action?
Yeah, Lata, before I say that, I think 2 points very quickly I want to say. I think if you look into the core GVA number, that has come in at minus 29.7. So I think that has almost collapsed. And I think all these talks about a rural recovery doesn't make sense if you look into the data. The nominal GVA in agriculture has now actually declined significantly to 5.7%, which is growing at 13% in the last 2 quarters. And this is basically on a deflator of 2.2. So that actually contrasts with what we are seeing in the food prices. Now, having said that, in terms of the action, I think the first action we have to contain the pandemic, and we have to give power to the states to do that, because right now the way the things are actually progressing. And I would like to differ with Professor Mittal on one aspect. I think India's death rate is now the highest across all Asian countries. So that is actually now 250.
It is steady at under 1,000.
Going up, and there is seems to be, per million, yes, per 1,000. That is the highest in Asia. So that's one thing which you need to remember, even if it is much lower than the European counterparts. So the good point is that at this point, we need to give power more to the states in terms of controlling the virus, because September also would like to be not good. The first 2 quarters will be a washout. And in fact, we are expecting a much better number compared to what we had got today. So from that level, our revision of 6.8% is likely to be in double digit. And I agree with Sonal that we are unlikely to see a positive growth in any of the 4 quarters in the current fiscal, even though we may have a positive base. And in terms of the action you asked me, I think right now it may be premature to talk about action, because until and unless you get a control on the pandemic, I think it is futile to see of any fiscal transfers or anything working with a multiplier effect. The only thing is that is survival right now. If we can get out of the pandemic, then you can think of some pandemic maybe towards the end of the festive season, because right now the curve doesn't seem to be flattening enough by the time when the festive season will start.
Okay. Well, I'm asking for solutions because I think we know that the numbers are dreary, and as all of you have agreed, it looks like a positive number, even with a lower base in the fourth quarter, is not going to materialize. Dr. Mundal, therefore, that question again to you. Where is the government's firepower, the limited firepower, effectively spent? Yes, Dr.
Lata, are you asking me?
Yes.
Cut off for some time.
No, Dr. Mundal, I'm asking you, what is the best that the government can do, hoping, of course, that your estimate that we are peaking off in terms of death rate at current levels. Therefore, any expenditure by the government or any fiscal steps in October should work. Where is the government's limited power best spent?
If you look at the expenditure data that the CGA puts out,
Yes.
we have it till the end of June, and there has been not an iota of deviation from the budgeted expenditure figures. It's grown at 13%, quarter over quarter, which is exactly what was there in the budget. So in other words, the entire massive shortfall in revenue has been completely offset by increase in borrowing, and that also you see if you look at the borrowing program of the central government from the RBI data side. So, in other words, in a macro sense, quite a lot actually has been done. If you add to this the liquidity infusion that has gone on.
Yes.
And as some of us have been warning, that if you do too much of that without an adequate response on the supply side, this may simply translate into higher inflation rather than faster recovery. And that's exactly what is happening. You're now looking at a headline inflation rate of over 6%.
Yeah, nearly 7.
Yeah. So I would be very cautious on just pushing more on this pump priming of demand. They can do much better in the sense, as you can see, the biggest shock in final demand is in private consumption. And I think that is where they need to put more money in the hands of people, which has a very fast, quick multiplier effect, because poor people just spend it on food right away. The trouble is that, governments tend to think, especially central government, in very conventional terms. They will look at established lines like, this Kisan, PM Kisan or Manrega and so on. And they are, I think, just not prepared to think about an open distribution, what is now called, basic income support. I mean, that's a big step conceptually in terms of a policy reform, and I don't think they're ready for that.
No, the ISI has even suggested, the Indian Statistical Institute has suggested that an MNREGS kind of program for urban poor. Are you referring to something like that, or are you referring to something more radical, like basic income for all?
I think my preference would be for the more radical one. I don't think it's on the cards.
No, it's not.
But even if they do this, if they have urban counterpart of Manrega, that would help a lot in terms of bringing relief to the poorest segments of our consumers, and with a very high multiplier effect in macro terms. I think that is the only thing I would want the government to do in terms of their expenditure programs, because putting more money, of course, it's a infrastructure program like the rural roads program. Is very helpful, but that also, puts money in the hands of construction workers right away and so forth. Construction having taken a big hit, some infrastructure projects may help on that count. But more important to the point that Shomya was making, and I think this is very, very important, as we have moved into a situation where more and more the frontline action has to be taken by the states, you find less and less initiative being left with the state, despite all the hype about cooperative federalism and so on. There seems to be an instinctive reaction of central government to more and more centralized decision making, to a central government what actually does nothing except put out the money. All the action has to be taken
by the states,
on the ground level by the states. So you must let them judge, and these are the same bureaucrats who serve in the center. There's no difference between them in terms of competence and capacity.
Absolutely.
Let the person in Assam or Bihar or Odisha or Kerala take decision on the ground on what works best and follow that. So I would strongly endorse that point about effective decentralization that Shomya was raising.
Absolutely. That has come from several people. Sonal, two quick questions for you, since we will be running out of time. Is the Indian GDP number much worse than comparable countries? And what's going wrong then?
I think we have lost.
Okay.
I don't know what's happening.
Yeah.
Sonal, you can hear me?
Yeah, Lata.
Yeah, so my question was to you. In a comparable sense, are we doing worse than peer countries, and why?
Well, actually, this is the worst growth hit we've seen in Asia in the second quarter. Definitely, it's the worst in the region. And I would think this is largely to do with the stringency of the lockdowns we have seen in India. It has been one of the most stringent lockdowns. So I would think it's largely because of that, Lata. The concern, though, is, as I was mentioning earlier, is that, if a company needs to operate at 60-70% capacity for, 12 months while paying, fixed cost, the risk of a number of companies actually going into the bankruptcy mode is very high. Or the risk of companies firing workers in order to stay afloat is very high. So the priority right now has to be to ensure that we don't allow this permanent damage. So I think more is necessary in terms of support for the industries which are still struggling to actually recover. For instance, the government could look to share some of the wage cost burden of these companies so that they keep these employees on their payroll. Followed by, the thought about consumption stimulus makes sense. One idea would be to give a more time-bound, consumption voucher so that you see a front-loaded spending on the government, along with the urban employment guarantee program kind of a scheme. And from a more medium-term perspective, yes, investment is required in infrastructure. But I think before we get there, there is still a lot of, the survival mode of measures. And I think particularly from the fiscal side and on the credit side support, that is still extremely, extremely necessary right now.
Okay, well, just very quickly, Dr. Mundal was also mentioning that further liquidity is going to be counterproductive. What's the space the Reserve Bank has?
Well, liquidity is ample. The question is, is liquidity reaching the right entities?
So what can RBI do, you think?
I think at this point in time, the priority actually has to be more fiscal kind of support measures rather than RBI. I think what the RBI can do right now is essentially, keep liquidity easy. I think, when inflation eases off, there's some room for rate cuts. But I think importantly, while the fiscal side is doing the first line of defense, the key role then for the RBI becomes to ensure that longer-term interest rates for the government actually remain under check. So I think more fiscal monetary coordination essentially is what the RBI can do right now.
Okay. Well, is your number as bad as Dr. Mundal and Soumya are saying? They're going with double-digit minus. Do you think we could be that bad, Sonal? I know you have not put it out in the public domain, but I'm just asking directionally, can it be double digits? Minus 10?
Lata, you're starting at minus 24. So if the pace of it's really a function of how the pandemic curve plays out. I think, of us trying to give a number right now, in 6 months' time, whether we see the pandemic curve improve or go down, the number can be anywhere. But I think clearly we are looking at a significant decline this year.
All right. Got that. Soumya, it's a very radical suggestion that Sonal is making, and several others have also said that at some point, I think even Dr. Mundal said in a previous conversation, that you may have to help even organized industry with a payroll support so that, people are not fired or their salary is not cut. Would you be in that camp?
No, I think so. I think some sort of support is absolutely essential for these sectors. I think the question is now of fiscal package to support. It's for survival, and the support for any stimulus will come later when we actually out of the pandemic. So from that point of view, I think some sort of support for the sectors like hospitality, tourism, or aviation, where actually we have seen the maximum number of job losses, I think could be very useful.
Yeah, I did ask the CEA that. Okay, our audio is not helping. Soumya, we'll continue the conversation at a later date, but take your point that, fiscal support is needed for specific sectors. Dr. Mundal, Sonal and Soumya, thank you very much for joining me. To quickly summarize what our experts have said, it's possible that we are staring at a minus 10% GDP contraction for the full year. It's possible. So much will depend on how the pandemic curve goes. In terms of suggestions, infrastructure is something everyone has mentioned. You just create jobs through rural road construction so that cash goes into the system. But otherwise, it's survival kind of things that the government could do, putting more, say, urban food stamps or consumption vouchers, some kind of an urban MNREGS, and more expenditure, more money be given to the states, because that's closer to the people and they would know how best to spend. An important proposal coming in from the economists is that even organized listed larger companies could need support in terms of a payroll tax cut, so that they don't fire people and don't cut salaries, just so that survival is ensured till the pandemic ends. It's a grim scenario, and there are some radical suggestions. That's it on this edition of Indianomics. Do keep it with CNBC-TV18. That's lots more lined up for you.